The coronavirus is plunging the world economy into its worst downturn since the global financial crisis, according to the Organization for Economic Cooperation and Development, which warned on Monday that growth could be cut in half if the outbreak continues to spread. According to the OECD, policymakers around the world must act now to prevent such a scenario. While Nigeria is viewed by many as highly vulnerable to virus spread, given its weak health system and high population density. Well, let's talk more on the implications of this virus spread, not just for the global economy, but Nigeria in particular. I'm being joined by an international consultant and the CEO, Espera Global Corporation, Dr. Glenn Prince Abi. Thank you very much, Dr. Abi, for joining us on the program.
Thank you very much for having me.
All right, let's begin with the global economic outlook already. The growth outlook for the global economy is being reviewed downwards. Why is the impact of this so significant?
Well, I think barely 3 weeks ago or a month, I think we had this conversation here in this studio, and I mentioned that the level of the impact of the coronavirus. At that time, it didn't look like it was a big deal. It was just restricted to China and all that. And people were thinking that perhaps it will die down there. And I pointed out that if anything happens that increased the rate of the expansion of the virus, it means that there will be a tremendous implication for global value supply chains, and the global economy will be affected. Oil prices will drop, and even Nigerian economy will have a baton from it, because if the budget 2020 itself will be affected because of the budget, what the budget was based on, and all that will now be affected because of supplies being affected from China, because Chinese importation from the world, from the global oil market is huge. China is the world's greatest importer of crude and all that, and China is also the world's factory. So it means that various production concerns across the world, not just in China, but in Asia, in South Korea, in Japan, in the whole of the Eurozone and all that will be affected. And I mentioned that these developments will affect the global economy, and of course, by extension, Nigerian economy. And now, what I predicted then is already hitting us. The oil price volatility, we can see the price is already in the range of just $50 and all that per barrel and so on. And so globally, across the world, there's a whole lot of panic. Saudi Arabia, of course, OPEC, led by Saudi Arabia, is pressurizing Russia to join in terms of production cuts. And currently, the level of production cuts by OPEC is the lowest in the past 10 years, the lowest. And all these are like reactions to the coronavirus epidemic. So a lot is already happening that's affecting the global economy.
Dr.
Currently,
Abi.
just yesterday, the American Federal Reserve Bank, Jerome Powell announced rate cuts. Now, why was that? Because they wanted to do a situation where consumer spending and business confidence in the economy, generally will be enhanced, and then spending will occur so that there will be more cash flow. Because the fear about the coronavirus is such that when spending is held back by consumers and by businesses, it means that the whole economy will be affected. So global economic outlook either by the World Bank, IMF, and other analysts has already, the coronavirus epidemic is already making nonsense of such predictions in terms
Dr.
of global growth and all that. So
Dr.
what
Abi,
will happen across the world will happen in different countries in terms of
Dr. Abi, yes, you did mention, of course, some of the responses by the Central Bank of the world. We had the Fed yesterday. We had the Bank of Japan. Now, do you have a sense that the response to this outbreak is actually disproportionate? Do you think that there is a kind of overreaction to this?
Well, at the individual level, people level, in terms of communities or people and all that, yeah, the reactions are a little bit disproportionate to the direct impact of the virus itself. But the strategies by economic managers across the world are right, because people's perceptions and people's fears are the reason for various developments in the markets, whether it be the capital market or whatever. Okay, people's perceptions, people's fears are the cause for shares falling and all that. And recently, I think the world's richest persons lost about $244 billion all within the space of 1 week, and it's all because of perception. So yes, you are correct in one sense that the perception, the attitude, the reactions to the virus outbreak is actually disproportionate. But the strategies used by managers of economies across the world are appropriate, because these strategies are a function of the perceptions, the reactions of people concerning the virus spread. And we know, and as it is now, it's actually not abating. In China, it is dropping in a very good way. The Chinese have done so well in containing the virus. But what's happening across the world right now is threatening. We don't know what is going to happen further in South Korea, for instance, which is the worst hit. Just yesterday, so about 500 persons have been reported to have just 1 day only have been detected. And then again, what's happening in Italy, what's happening in Iran. Iran is also in the news. They had to release some prisoners just to avoid all of this and all that. And then it's spreading further in the Eurozone and so on. So the spread is really threatening. And also in the United States of America, this is also happening. So community infections and spread of the virus can get to a scale where so much can actually grind to a halt. So the strategies used by economic managers, the central banks of the world, and also the finance managers of the OECD, those strategies are very much in order. And I would also look at, in terms of Nigeria, currently what is happening is strictly on the health domain. But when you ask me about Nigerian economy and what we're doing and what we need to do, I will explain that further as to what
Absolutely, Dr. Glenn, we will get to that. But just this morning, of course, the World Bank announced $12 billion in aid for developing countries, grappling with this spread of the virus. And of course, back here in Nigeria, we have Dangote Foundation pledging about 200 million naira in support of the fight of this spread of the virus. What's your take on these?
Well, these plans, the funding plans, the grant plan by the World Bank, Dangote Foundation, and various other initiatives and plans that are carried out by different bodies in the world in reaction to the coronavirus. It's just at the health level, okay? It's at the health level. We should be more worried about the economic level of it, what the overall implication is for the economy in terms of economic growth, in terms of employment generation, which has always been our target. And we have to be more worried about the fact that a number of countries were already on the margin, were already on the edge of recession. For instance, the Japanese economy has already been on the edge of a recession, and then this has happened. So what you can imagine what will go on. So many countries, their economies are sort of already at a shaking point before this event occurred. So it's actually as at early December or mid-December, nobody thought that anything of this nature will arise. And countries were already facing some challenges. Even the oil sector, where we have said that the price of crude has fallen and all that. The international energy industry had been under a lot of threat. For instance, there have been, among the largest oil companies in the world, there are what we call stranded assets, worth about $900 billion. What do I mean by that? For instance, there are assets of these companies that have already been, sort of challenged because of the need to meet global demands in terms of climate change and all that, based on what was agreed in the 2015 Paris Accord for climate change. Now, if the measures put in place are to be followed strictly, it means that the entire global energy industry, oil and gas industry, will lose $900 billion as stranded assets. That is at the climate change level. But now we have had the coronavirus thing coming again, which is affecting global demand for crude oil and gas. So you can imagine what the impact is going to be for oil companies. And then, of course, commodity-dependent economies such as Nigeria and other developing economies, how they depend so much on commodities and all that. The impact is massive, when we look at what the coronavirus can do.
All right, Dr. Glenn. Let's now come to the domestic economy. Of course, Standard & Poor's have reviewed Nigeria's economy from stable to negative. IMF already had downgraded its outlook on Nigeria, and we know that a lot has been said about the possibility of some countries getting into recession. How much of impact do you see this virus outbreak having on Nigeria's economy? Are we likely to get into recession? South Africa, by the way, got into recession, technical recession yesterday.
Good. Well, when you were mentioning the report by Standard & Poor and the downgrading of the Nigerian economy, the outlook and all that in terms of growth and all that, I wasn't surprised. But the good news is that it's actually not strictly a Nigerian problem. It's not because Nigeria stood out in terms of its peculiar problems. No, it is what is happening across the world. You see, there's a problem across the world for growth across the world, whether coronavirus or not. This problem had already, taken a hit, and it's happening. So Nigeria is just one of such manifestations across the world on that. Okay, but now specifically with the outset of the coronavirus is going to cause more problem because Nigeria's economy is deeply dependent on our crude oil exports and all that, and our foreign reserves will certainly take a strong hit and so on. Oil prices have dipped as it is. There's further volatility. There's a lot of fears right now, and as I said, the perceptions about the coronavirus, they are more of they are the main reason for the various actions that are occurring in the market. Okay, so what that means for Nigeria, for instance, as I said some time ago, and I will still repeat, is that the federal government would need to do a quick revisit of the budget and do a lot of tweaking here and there and all that. But specifically, I would recommend, and I would recommend that a lot of actions need to further be, raised vis-a-vis fiscal and monetary policy, although I would commend the current situation vis-a-vis fiscal and monetary policy, because the federal government's plans on the fiscal domain and the central bank's strategies under Godwin Emefiele at a fine moment, and the finest moment I can see, really, because there's a lot of synergy, there's a lot of convergence in fiscal and monetary policy. The central bank seems to have actually folded its sleeves and gone into the fray to ensure that jobs are created, production is enhanced, particularly in the area of agriculture. So what I foresee happening and what I want to recommend and propose to the managers of our economy is actually to do a lot more in terms of accelerating, instigating production, and making sure that there is a measure, that things are well tracked. As I always said, a war room needs to be set up to start to track things, because the impact of the coronavirus is so strong that what we should visit now will be a strategy for strengthening, reinforcing, and accelerating production, a production-based economy. I was happy when I read a couple of days ago, the central bank governor was invited to Dangote's facility, the refinery facility, and Dangote had said that 70,000 new jobs are going to be created. That's very impressive. That's very good. But I think that I am of the opinion that we should rather start to look at how, instead of one big company creating 70,000 jobs, we should look at 70,000 entrepreneurs creating 10 jobs each. That will give us 700,000 70,000 jobs. 70,000 entrepreneurs giving us just 10 jobs each, okay? Strategies of that nature is what I expect. A lot of collaboration, a lot of synergy, a lot of cooperation between fiscal and monetary policy managers in this country to address because of the challenge that the world is facing and because of what we are facing. So if we scale that up exponentially, it means that 10 states, in 10 states, 70,000 entrepreneurs creating 10 jobs. In 10 states, we now have 7 million jobs. In 20 states, we now have 14 million jobs. In 30 states, we have 21 million jobs and so on. And these are possible within the space of 1 year if we make the strategy, if we approach the strategy in a very aggressive way.
All right, Dr. Glenn. Now, in just 30 seconds, now, how far do you think the Nigerian economy can withstand the current shock if this spread persists?
The only way, Chime, that the Nigerian economy can withstand the shock is, first of all, let Nigerians generally at the micro level, each and every one of us, we shouldn't overreact about it. And then, of course, for the Nigerian economic managers, just as I've said earlier, to focus more and more on production, creating a production-based economy, whereby there's a lot of internal consumption and possibility of exporting and improving the quality of our products in such a way that we can actually compete in the international marketplace, okay? These are strategies. This challenge should make us to actually tighten up that strategy more. We should be more aggressive. We should be more focused. Set up a war room of about 12 persons that are 24 hours a day, 24 hours a day, 7 days a week, 365 days a year, working per second on what is happening and then tweaking it right and then getting everything being accelerated vis-a-vis production. We should be a production-based economy and depend less on commodity exportation.
Absolutely. Thank you very much for your time, Dr. Abbey. Dr. Glenn Prince Abbey is an international consultant and the CEO Espero Global Corporation. Well, let's do an opening call now to the debt and currency market with Bankole Odusoya. He's the head fixed income with UBA. He joins us from the FMDQ marketplace. Good morning, Bankole. Thank you for joining us.
Good morning.
So can you do a quick review of yesterday's trading activities at the fixed income market? And, of course, were there kind of a feel of coronavirus scare? Did that in any way affect sentiment yesterday?
It's the beginning of a new month. On the back of an extremely liquid market, last week we had so much liquidity that the central bank mopped up funds using the CRR tool. What we have seen this week is illiquidity, and this has reduced system activity, trading, especially trading bills and bonds. Rates that were at 10 and 11 have now climbed up to 12.5, especially on the long end of the Treasury bills curve. This is as a result of the mop-up that occurred. For the bonds end, it's just the widening of spread that we've seen. We've not seen major sell-offs, but we've seen sell-offs on Treasury bills simply because of illiquidity. Going into next week, into the rest of the week, we have just an OMO maturity on Thursday. This helps to bring in funds that will simply just reduce the illiquidity pressure. The next bond auction will happen on the 25th of this month, and so there's still a lot of time, and system activities are expected before then.
Bring us up to speed with sentiment this morning. Where is the yield curve as of this morning?
Nigeria's fixed income securities are at 11 to 12%, the entire yield curve. For bonds, it's very steep, where bonds below 3 years and 5 years maturities are trading as low as 6, 7, and 8%. For the 2049, which is the longest bond on the Nigerian curve, it's currently at 12.1%. The last auction, it stopped at 12.15. We expect a further decline going into the year simply because of so much funds maturing from the OMO Treasury bills and not being able to be reinvested in that line. So those funds are now in pursuit of Nigerian Treasury bills issued by DMO and FGM bonds, which are not so much in supply. That has caused the crash we've seen in yields generally, and even a major drop we've seen in term deposits. At the overnight markets, however, rates are at 14 and 15% simply because of the illiquidity we've seen. We expect this to abate tomorrow when more maturities kick in, basically.
Right, thank you very much, Bankole Odusoya, Head Fixed Income at UBA. After the break, we will do an opening call to London as well as the Nigerian Stock Exchange. Do stay with us.